Many thanks, Nichelle. And again, thank you again, Gargan and Transport Events. The first area I'd like to look at is really just dig back into what's happening on the demand side and what's the likely impact for port investments. It's fair to say that even before we went into the COVID-19 lockdown, global trade was not in the healthiest of states. If we look at the left-hand graph there, this is a projection of world merchandise trade, so containers and non-containerized, set at a 100 figure for 2015. And you can see the trajectory, the blue line that we were on up until the global financial crisis, then knocked onto a lower trajectory. And then you can see two scenarios that the WTO are forecasting on the other side of COVID-19. An optimistic in green, which assumes the pandemic eases in the second half, and the more pessimistic in red. On the right-hand side, we see a similar long-term view for containerized trade. As many people will be familiar, what we've been seeing over the last 20 to 30 years is that every percentage increase in global GDP has been leading to a smaller percentage increase in terms of containerized trade, or a very simple multiplier, as we used to call it, which was 3.4 in 1990 to 99, dropping down to 1.4 in the most recent decade. And if you look at that graph in terms of the yellow lines, it's showing you the compound annual growth over those decades, 9.9 in the 80s, 9.1 in the 90s, dropping to 4.6% in the most recent decade. And that's not just a product of lower economic growth, it's also a factor of perhaps retreating liberalization, a slowdown in the rate of containerization penetration increase. What also jumps out is what a sharp contraction we're forecasting for 2020, sharper than we saw for the global financial crisis. So really there's two key questions that come out of that is when is growth going to return? And when growth does return, is it simply going to be business as usual, or are we going to see more diversification of supply chains, nearshoring and or reshoring? In May this year, we held a webcast on the topic of global trade. We had about 1,700 people joining. And during that session, we asked various poll questions. The first was, when do you expect global economic growth to return? And you can see the answers there on the top left. Only 12% assumed by the end of 2020, 32% the first half of 2021, 41% in the second half of 2021. We've seen some positive signs. China GDP contracted by 6.8% in the first quarter. The first time in about 30 years there's been a contraction. Q2, there's been a stronger than expected return with a 3.2% expansion. However, it's also noticeable that globally, the IMF has become more pessimistic in its forecasts. In April, it was forecasting a 5.8% recovery in global economic growth. It's now adjusted that down to 5.4%, and its declines for 2020 have moved from 3% to a contraction of 4.9%. More interestingly, I think, is when growth returns is what will be permanently different, what will be structurally different. Again, one of the questions we asked on that webcast is, how do you expect global supply chains to restructure? And it's noticeable that 52% thought there'd be significant geographical restructuring with increased nearshoring and multi-sourcing. 34% thought that would also include reshoring, so production actually coming back to home countries, whether it be the US, Germany, or other locations. And in the bottom of that graphic, you can see a couple of other surveys done recently in the US. One which said that 64% of North American manufacturers say reshoring is likely following the pandemic. And another say that 40% of American consumers say they will not buy made in China. And 78% say they are willing to pay more for products if companies that make those goods move their manufacturing plants out of China. Now, it's important to note that April and May are extremely emotive times to be asking this question. And it's also possibly a need to dig deeper into just how much is the likely increase in cost and how much really are people willing to pay. It also worth saying that doesn't necessarily just mean everything reshoring or nearshoring. There may be other opportunities for sourcing outside of Asia. And the middle graphic is really showing why we should not underestimate how significant or insignificant any changes might be. If we look at a number of Asian manufacturing bases, production bases, many of them are hugely dependent on inputs from China to feed those factories, particularly Cambodia, Vietnam at the top of the tree. It's also worth noting that actually this debate is not necessarily that new. The trade war has introduced certain threats and opportunities for some countries, specifically Vietnam, which has seen a dramatic uptick on the back of that. But also some of that has simply been Chinese manufacturing capability relocating and rebranding within Vietnam. It's also true there's been much technological discussion around Industry 4.0 and what advances in robotics might mean, even in the textile sector, which traditionally has not seen that much adoption of advanced robotics. So the question is, beyond the interesting case studies that the business schools like to major on, how widespread will this actually be? How significant will it be? Bear in mind that the scale of the production capability in China dwarfs anything that we can find elsewhere. Also bear in mind that the quality of the supporting logistics infrastructure and supply chains also cannot easily be replaced. Finally, I would note that in the last quarter, or the third quarter rather, of 2019, Xi Jinping announced a strong focus on blockchain. And as ever in China, when the Beijing government initiates something such as this, a lot of the players immediately fall in behind it, and these changes can take place very quickly. This focus on blockchain is part of a desire to upgrade and upskill the supply chains in China and say to the world that not only do we offer cost-competitive manufacturing locations, but the visibility, the transparency, the ability to track within our supply chains is extremely high. A couple of other key questions that have some implications for port investment decisions, and particularly the scale and the size of CapEx that people need to develop to accommodate vessels. We asked a question whether people thought the impact of COVID-19 might cause a rethink around mega vessels. The proposition being here that with more uncertain demand, depressed demand, will shipping lines reassess the almost herd-like stampede toward mega vessels and look at smaller sizes of vessels. Now, 68% of respondents in that survey said yes. Again, I would be surprised if that is actually the case, not least because those newer vessels that have been ordered and are on the order book are likely to still go through. That first question also probably runs counter to the second question, which is, will COVID-19 increase the drive of ports and shipping to reduce their environmental footprint? Now, I was expecting possibly a different answer here, that people would be focusing purely on the bottom line and stabilizing their finances. But our respondents there, 51% of them, thought that yes, it would increase the drive of ports and shipping to reduce their environmental footprint. If we circle back to the above question, bear in mind that the mega vessels, generally because they are newer, are probably the most environmentally efficient because they've been manufactured with the latest technology, and in some cases, the ability to dual run off LNG. Therefore, those mega vessels could be very much and are very central to part of shipping lines' desire to decarbonize. So if we're wrapping this up in terms of some key things we'll see now, next and beyond for port and terminal operators, obviously there's the immediate implications around not only the drop in demand, but what the additional containment measures mean for operating effectively. And clearly that impact is greatest in those terminals that are very dependent on labor. And not only that labor in terms of within the terminal itself, but also the implications of when vessels come in and there are crew changes and what those crew changes might mean for the response of labor within that terminal and their concerns about potential exposure to COVID-19. So there could be a proposition there that the automated terminals are better placed to handle these changes and possibly provide more flexibility in capacity management. We've seen some short and medium term concerns about buildup of import boxes at certain terminals, and if demand were to recover quickly, that this would lead to a stranding of certain boxes at the wrong locations of the trade, such that those locations that require empties for stuffing are short because there hasn't been the same recycling. I think if the recovery is relatively slow, that should be less of a problem. Of course, in many locations, ports will defer expansion plans until demand risk is eased, but also conversely, in certain congested locations, a temporary easing of demand could provide an opportunity for ports to bring forward expansion without concerns about disruption and losing market share. We have also started to see in some territories the response to COVID-19 has severely depressed and put pressure on government finances, and we see a renewed interest in accelerating privatizations or recycling of port assets to strengthen the government financial positions. And the final point I'd like to raise here is, will COVID-19 accelerate digitalization, not just in terms of optimization and simulation, but especially around smart port ecosystems that reduce person-to-person interface and enhance supply chain sustainability and resiliency. And the last slide here is just a schematic of what you might regard a typical port ecosystem, but really a diagram that we developed about 20 years ago, upgraded for the digital age. And two key takeaways in terms of comments from both UNCTAD in their January 20 report about digitalizing the port call process, but more recently in June 2020 from IAPH. And that last quote there, that exchanging paper by hand and relying on person-to-person interaction simply doesn't cut the mustard anymore, neither from a safety nor efficiency standpoint. And we are certainly seeing increased interest from a number of our clients in moving forward on deploying the latest digital technology to enhance their port ecosystems and truly develop smart port ecosystems that link to the wider trade community. Thank you.